is there more soldiers on the other side of that EMA? Did they go pick up new soldiers? Because, now that it's weak, to kind of give y'all a little background, right? I love trading. I've done trading for a long period of time, and oh, come on, 4:30. Come on. Let's go. Hey, good morning. Welcome to an episode of After the Trades. Now, I know normally I do this as a recording, but still kind of getting my channel the way I want it. Don't forget to hit the like, subscribe, and the bell button. We're going to go ahead and really break down a few things. As you know, BYTTT is before we take the trade. The purpose behind that is to kind of get you ready early in the morning, so that way you can know where your setup is before the market opens up. But we also have after the trades. The purpose of this is time to kind of recap some of the trades that were placed. I'm going to do this a little bit differently. I do have my friends and family set up and everything. Listen, just go ahead and comment. If you want to be part of friends and family, just let me know, and I'll bring you to all the details in itself, so that way you can get very, very good insight inside of the market. Also down below, the link to my charts. The charts, I get it. Sometimes people want to chart their own thing and everything else, but if you need some guidance and something with a proper trading plan and everything else, click the link down below. Get yourself your chart. Suggest the ticker that you want me to pull up and get it all wrapped up for you. Sometimes people just need some help. If it doesn't pan out, it doesn't work out, or whatever the case may be, there is a money back guarantee with the charts as well. And then, of course, I do have my mindset on Saturday. If you want details on that, by all means, just go ahead and DM me on Instagram, JD_the_great. All my socials, I guess it's this hand. Yeah. So socials are down below. And last but not least, I want to say thank you to everybody. I am currently at about almost 350 subscribers. So let's see if we can get to 500 by the end of September. Got ourselves a goal, and we're going to go ahead and try to push right on through. So that's it. I'm blending in before you take the trade with a little bit of after the trade, doing a nice little special for y'all, so that way you can kind of understand what it is that I envision for this channel, and that way you can understand how my thought process kind of works, and get some money. That's the whole purpose. You're not on this channel not to make money, right? So we're gonna go ahead and set up to try to make some money. So without further ado, let's go ahead and pull up the screen. You will see on my screen, I use this a lot, which is called my 8 grid. The 8 grid is just to kind of give me the top 8 things that I'm watching. I'm always consistently watching the commodities and the indice markets, because it kind of gives you the direction of where the rest of the market could kind of follow. It's kind of like these are the waves of the ocean, while there's the little coral reefs, the little fish, the sharks, and everything else between your Teslas, your Microsofts, and maybe something as small as your, I don't know, Rivian, Lucids, and all that stuff. So I still kind of cover those things, especially during earnings cycle. Oh, and then also we're probably going to do a lot of IV flush. I got a nice little challenge for one of my one-on-ones, and they were asking me a lot of questions on why I don't do IV flushes. And again, I got so many other ways of generating profits, so I never really considered it. But that said, I am going to look forward to really breaking down a lot behind those IV flushes. If you don't know what that is, well, I'll break that down along the way. So without further ado, let's go ahead and get into the charts. The first thing I want to kind of break down is NQ. You can kind of see what's going on with NQ here. I got one overlay that's not on. Let me turn that one on. There it is. All right. So the first thing that I see here, get out the way, is the fact that right now we just been really wading in the water. If you really think about this, right? We've been wading in the water into this whole entire range up here, and right now this wade in the water is kind of giving that extension, kind of like a bear flag, and then now we got the extension to the downside. Now the funny thing about this is the fact that if we actually get rid of this pivot, which we're getting very, very close to do so, because this is the kind of angle that we were dancing on that kind of gave us that ending in August that everybody's been looking for, which was, hey, let's finish August strong. And this is why it's important that you draw trend lines. Listen, folks, and I'm probably going to start doing some news. There's a lot that's going on in the trading realm. But if we look at this, like trend lines are designed on one way and one way only. There's no such thing as a higher high without a higher low, period. All right. So just keep that in mind when you're drawing your lines, so that way you can make sure you're doing accurate lines. And we could see after we kind of did this pivot, we had an additional pivot, which was right here. And that is the catalyst that kind of got us back up there. We had this hammer candle that put some pressure right here on this 2 hour, and it kind of drifted us down. Now, this is a far cry compared to what was going on in the daily. The daily was giving us this type of action. So we're really starting to look like a head and shoulders based on these parameters, because we couldn't get rid of this pivot here. So it's going to be very interesting on how the market responds to all of that. So that said, let's go ahead and keep this moving. We got oil. Now, oil is where I thought I explained this to y'all before, right? And I know I got quite a few lines. If it's confusing, by all means, just go ahead and type in the comment. That way I can send you my one-on-ones, and then I could really break this down for you. One-on-ones are free for the first 15 minutes, and I always try to give you as much information as possible, and I'm very generous. So free one-on-ones will be available in the near future, but just comment down below letting me know if there is just way too much and you can't really understand what's going on. Just go ahead and send a comment down below. So let's really understand what's happening here. You got yourself kind of like a tweezer top that happened here, and then we pushed all the way down to this lower register, but you can kind of see nice little base here with a nice little reversal. This is the reversal that we're on ever since contract expiration, right? So I think what they're trying to do is recapture this whole entire area, bringing it back up to here. And if we go to the weekly, this was the massive sell-off that happened before, and I thought it was going to give us some real pressure bringing it down. But if they really start to slow down production, guess what ends up happening inside the market? Well, the first thing is going to be, well, if they slow down production, then it's going to bring in the value. And if it brings in the value, then that means the price is going to go up. And if the price goes up, then guess what ends up happening? We're going to get expensive gas and the gas prices. So now that we're kind of tapering off into the summer season, and now we're going into the winter season, this is when natural gas kind of picks up and oil kind of drops off, especially with people going back to school and they're no longer at their vacation. They're not taking long trips or anything like that. So it's very important that you keep up with oil in this regard, because it'll let you know what the climate is. So I do think that they're going to try to get up into that 68, maybe $69 in oil. And then if it does reject off of 69, then look for this thing to kind of come back down, which is a good psychological level for $70. And that's the one that I'm probably going to be spending a lot of time looking at. All right, let's keep this going. We got gold. Now, gold has been moving and it's been drifting up. If you've been watching my before you take the trade, I was warning y'all that there's a strong possibility we're going to get to 3,500, and that's exactly what we did. We just been putting 1, 2, 3, 4, 5 straight green candles to get up into that upper register. Where's my target? I'm looking for a possible target somewhere around 3,600, which is a good psychological level, so that way it could go ahead and push right back down after the fact. But right now the dollar is suffering, which we're going to go ahead and get right to. So just be patient, and I'm going to break that down. Now, I do chart silver because silver has a tendency on dragging gold wherever it needs. So this is my predictor, or this is kind of like my confluence in itself that gold was going to break out, because this neckline of this W was a perfect example of what silver can do to gold. As soon as they popped up, I told y'all for almost 2 months, silver will hit $40, and that's exactly what it did. So we're at $40. It dragged gold right up with it, and now you get into all-time highs. They kind of have that confluence. They do diverge sometimes, so pay attention. Do your charts the right way. If it doesn't make sense, then it doesn't make money, then you just go ahead and just sit on the sidelines. It's perfectly fine. All right, let's go ahead and keep this moving. We got the British pound. Now, the British pound, I told y'all this. The British pound did have the head and shoulders. We always aim for the 50%, but this does not tell us that we got complete reversal. Unless we stayed above this block, there was no way that the British pound was going to do the impact that we was expecting, especially with the market was drifting up and the British pound wasn't following. So it's very important that you also chart the British pound, because what happens to this is a catalyst to the dollar, and it could tell you a lot of the story and get you prepared. I'm looking for this to break this 133.72. I want to see them break that, because then we can see where the real bulls sit. I think you're going to get a nice little bounce somewhere around this level, which is going to bring you to like 133.22. So that's about 50 ticks or so to that downside, and then maybe get yourself a nice little bounce to the upside. So we'll see what happens there. And then we got Bitcoin. Now Bitcoin is doing something very interesting. I like where Bitcoin is, because we had a nice little pop up to the upside, and then we push you right back down against the order block, because I did feel like we have a very tough time. I know that downtrend line has been penetrated, has been violated, and I should take it off, but there's a reason why I didn't take that off just yet. I do feel like this was a nice little solid drift up, and they were aiming to get to that 125. And if we did get to 125, then we would have just dropped very heavily, maybe get to the 100,000, then kind of start to recover. But because we didn't hit that 125, guess what ended up happening? We started drifting our way back down, breaking the uptrend. And right now the market's trying to make a decision. Are we in the middle of an uptrend, or are we in the middle of a downtrend? So looking at Bitcoin at where it is right now, it's going to give some strong consolidation. So I want to see that consolidation build around that 107 to 110, because you can kind of see this was my target for almost a couple of weeks. And I want to see how this responds, because this can then predicate if we're going to get a stab at that 125 with strong support at this level. All right. So here's IWM. You can tell I traded a little bit of options too. Here's the Russell. The Russell, we already told y'all from before, we were breaking out of the order block. We got a nice little jambalaya rice order block that was over here. And now that we started really breaking those things down, this is a perfect example of a break and retest. And this could be coming back to retest somewhere around the ballpark of 23.32, 23.30, maybe even 23.20. And if it comes down to that level, look for it to start to consolidate. If it fails to consolidate there, then we're probably going to fill this entire fair value gap, push down to the downside, and then fail to hold this upside. So just keep that in mind. And then last but not least is the undeniable, the inevitable, the most undenied, the dollar. And I told y'all, I said, when we broke this upward trend, we were sitting on a very high time frame. Actually, let me take that back. I'll take that back. This was not the fair value gap. This was, okay. So right around this area, right? I warned y'all that we were filling back into a fair value gap, but we were coming back to the order block. So our next target would be this pivot. Now, the funny thing about it, when markets make these impulsive moves, guess what? You got investors that are sitting on the sideline. They're like, I want the best price. They're not going to step into the here. And then you got people that are selling, and they're like, I'm going to keep on selling because it broke under my order block. So we was between two different diabolical fights, right? You got the ones that are bullish, that's like, I can't wait for me to go ahead and get it at its cheapest price. And you had the bears that was just shorting it because they felt like they got complete control. Hence the reason why we got these long wicks here, long wick here, strong imbalance rejection right about here. So these are the things that you want to kind of see. But I knew coming over to the weekend, knowing that we're going to start a brand new month, that if we did not come back to this pivot, it's going to embolden the bulls for the dollar, and that's going to push it right back up. So potentially, right, this is not an official, because again, you need a higher high. Potentially, this is what we're looking at from the original pivot at this level with this kind of like a hammer doji or whatever the case might be, right? And they're looking to see if this holds. If this holds, then we're going to take a complete attack to here. And we're talking about the dollar getting to like 100.341. Yes, 100.341. That's going to be a complete tank of the market. So be prepared. Make sure you're sitting on the sidelines if you need to, because I do anticipating a pullback, not a bear run, not a flip, not capitulation, none of those things that you always hear on CNBC that's going to go ahead and happen. And if that's the case, then we're looking at a very, very interesting market that's going to go ahead and dictate how we're going to move going forward. All right. So that said, I think I covered everything in the gambit. We're going to go ahead and break down the economic calendar. So my favorite is my FX book. And if you do not use my FX book, then I totally understand. You're probably using something like Forex Factory. You're probably using the one that's built in inside of TradingView. Well, however that you are doing it, then I do suggest that you just keep up with what is going on. That's all that matters, right? So right now we got Tuesday. There's going to be very, 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 very detailed information coming in because Monday, we're dealing with a short week. Monday was a holiday, so all the news from Monday spilling over to Tuesday, and everything's going to be compressed. So there's going to be loads and loads of volatility coming in. So let's go ahead and look at some of the calendar. We got ISM. Manufacturing PMI, that's going to play a factor. You're going to get some volatility. That's around 2 o'clock today. All right, so just keep that in mind. We got some bill auctions. This 52-week bill auction is probably going to be one that I'm going to be very concerned about. But this one's at 5 o'clock, which is a little weird because normally bond auctions, bill auctions, all of this stuff, they usually happen around 1 o'clock. So right now they have this thing happening at, that's 5 o'clock. So I'm very curious on market reaction at the close. Let's see, on Wednesday we're going to get mortgage rate and index. We're going to get some Feds that's going to be speaking. Of course, there's a Fed that's under controversy and everything else, so that's going to be very interesting also. Job openings, so this one can add some real volatility to your tickers depending on what you're trading. And mind you, to kind of give you a little bit of a quick announcement. Let me zoom into my bigger camera right here. Keep in mind, we are in 2 weeks for quad witching. So that means between now and about the 19th to the 15th, it's going to get very, very volatile. So if you never experienced quad witching, I do suggest that you sit on the sidelines, maybe even paper trade. That way it can protect you, because that right there can really mess up your portfolio. And the goal is we're going to go ahead and be the type of people that keeps up with our risk management overall. That's what I teach. That's why I love making sure that we have capital so that way we can compound properly. All right, so moving on, you can kind of see we got Fed Beige book. That's going to go ahead and add some volatility, and that's going to carry on to the overnight. Let's go ahead and keep this going. Thursday, of course, you're going to get some European stuff coming in, but we got exports and imports. This is going to kind of tell us how our economy is moving. I do think that we're going to be doing more imports consistently again, but with the whole entire thing of our current administration trying to do everything they can do with the tariffs, maybe we can get some exports so that we can try to facilitate some of that money back, because right now the economy is struggling a bit. And then we got ourselves continuous jobless claims, S&P Global PMI information. This one's going to be tricky as well, kind of like the ISM PMI that was earlier. You're going to get some information in there, so that's going to be around 2 o'clock. And then hold on. Now I see what happened. Okay, hold on. I am not signed in. That's my problem. All right, let's fix that problem. Rewind just a little bit. I'm just gonna go ahead and just breeze through because it had the wrong time frame. I was like, wait a minute, at what time? That doesn't make any sense. All right, so we got ourselves Wednesday. Okay, so that's at 9 o'clock. That's the jobs opening. At my FX book, if you do not set it up properly, it will automatically revert you to like California. I think that's where they're based out of. That's how that happened. And at 1 o'clock, we're going to get the beige book because that's the normal time that they usually have the beige book. All right, so let's go ahead and continuous jobless claim is going to be on Thursday. That's going to be around 7:30 in the morning. And then 8:30, we got ourselves PMI. Then we got ISM PMI, and then we got ourselves oil inventory. Now, this is what I was covering earlier in oil. So we're going to get ourselves some very, very interesting stuff coming out of oil. I want to see what their production is going to be like, right? Because if their production is being ramped up, that's going to go ahead and lower prices, which I would hope that that's the case because we need some things to alleviate of inflation. What does oil do? If the gas prices are more expensive, then the shipping prices are more expensive. Shipping prices just goes right back inside of your pocket. So you want to see oil production start to go up. 30 your mortgage rates, of course. Balance sheet is going to be in place here. And then Friday, this is what everybody is waiting for. Every first of the month or the first week of the month, Friday is non-farm payroll. As I said earlier, there's going to be a lot of volatility coming in because of quad witching. But there's going to be even more volatility because there's going to be people that's going to sit on the sidelines waiting for non-farm payroll. And the goal behind that is for you to kind of protect yourself so that way you can have some cash, that way you can reposition yourself. So if you have anything that is expiring between now and September 19th, there is a strong possibility you can get yourself in a world of hurt with any of the pullbacks. All right, let's go ahead and get back over to our charts. Boom. Now, I want to kind of break some things down for y'all, right? Before I get into some of the tickers. Because this is the part of after the trades where I'm going to break down some of the stuff that I did in August, some of the announcements that I sent to my community, and some of the things that I seen that was solid. To kind of give y'all a little background, after running all the numbers, I noticed that my trades are about a 55 to 56 win rate. And that's not counting my TP1s, which is closer to like 60 to 70% win rate. And my game plan is to give a free chart every single week. That first day of the week, we're probably going to go ahead and give like 3 different tickers that we're going to be looking at. And with a closer to 66% to about 56% win rate, one of them are going to relatively hit. Now, the reason why I want to do this exercise is because I want to kind of put in perspective that it's going to require some type of risk management for you to understand how the market moves. And I don't want people to think that trading is super easy, but I want you to feel like it's completely eliminated because you got to be your own personal hedge fund. I want to teach how you can properly understand that if you took a L, to just cut your losses quick so that way you can get right quicker. That's what I want to teach. Shout out to my good homeboy Neo, because he's the main one that really taught me on that. So let's go ahead and get right to it. Let's see, where did I put my notes? Oh, it's up here. Let's put you over here. That way I can look left and get that going. All right, so let's start with some swing trade ideas. Let me pick one of my favorites. Let's go with, no, I think I'm too far down. Let's go a little bit higher. Let's go with a name that y'all know. You know what? Actually, let's go with this one. All right, so everybody knows me that knows me well. I do not like Chinese stocks. I haven't played Chinese stocks. And the last time I played a Chinese stock, I did it by accident. I just saw the chart. It looked really good. It came up through in my screener, and I end up inside of that trade, not even realizing it. Actually, you know what? I'm going to give y'all a different chart. Let me get my golden chart. Let's put this as dollar back and put this on daily, and I am going to pull up my golden. Right, and what I want to get, like the market is a very interesting market. I'll promise you that. But if you stay with your technical analysis and you do your work and you do your due diligence, just understand you will generate some type of profit. So let's go ahead and look at Baba. Right? So Baba, again, this is one from earlier that we had, and to kind of give you a little background, yellow is entry, stop losses, the red one, and then I only put 2 TPs. Purpose behind that, you want to be at your full leverage before the TP. You take your whole entire leverage and leave runners for your TP2. That's the general premise behind that, okay? All right, so during August 23rd, no, I take that back. That was not the case. During August 6th, roughly around this area, I was looking at this impulsive movement. Now, I do have proprietary algorithms that I use for myself. I created it so that way I can simplify things for myself. Um, and that's just how I relatively operate. Actually, I got it in the wrong spot. Right? Okay, there we go. Right. So when I launched this out to everybody, I was letting everybody know, hey, Alibaba looks good. It looks like if it can close above this level, then I would want for a solid entry to that upside. And depending on how your risk tolerance is, depending on your style of how an entry, you're talking about a good solid $2 movement here, just a little over $2, not even much, right? I was just under it, right? And that could literally take you from what was out of the money to in the money. And I do get it. Like, Chinese stocks are not the best to trade, especially with the whole entire tariff talks and everything. But the charts don't lie. Someone's investing into this company. Now, I gave multiple situations where you had a nice little pullback here, and if you were just sticking with it and you just stuck with these lines, another entry here gave another bounce here, and then another entry here gave another bounce here, and so on and so on. Which again, they try to do it again, which kind of gave us a anticipation of a stop because it looked like we were just being a little bearish, and that kind of pulled back. But then they give an entry for a downside, and it exploded to the upside. So that's what you can see out of that one. Let's go ahead and grab another. That one was a good one too. Actually, you know which one I would love to kind of go over is Shopify. This was Shopify during the earnings. Now, I don't play a lot of earnings, but I have a lot of people that does. And my job overall is to make sure that I have people that take sound entries based on the parameters presented in front of us. And if you want to take earnings, then listen, it's perfectly fine. So don't forget, hit the like, subscribe, and the bell button. That way you can go ahead and get more information about this. But you can see right here, nice little solid entry here. Break above the level, nice explosion to the upside, and guess what? It hit TP2. Of course, earnings is a gamble, it's a crapshoot. So I would say not to risk more than 1% of your portfolio just in case you're wrong. But this was a solid entry based on the parameters, based on the algorithm showing warning that, hey, guess what? This is a little bit of a chance of a reversal, which gives us proper entries because when impulsive moves come into play, and you can see this nice solid explosion saying that there will be pullback, and the pullback was this whole entire run here. So kind of give you an idea of how some of these tickers operate when it's all said and done. So let's go ahead and move on. I have a couple of them that is also based on its futures. For example, in the NASDAQ in itself. Now, NASDAQ is a very tricky place. I primarily trade the NASDAQ, I should say. But as far as the gold movement in itself, I was looking for a lot of this movement, and this is what I sent to the trading community as soon as I find where I put it. Let me just do a search, GC. Okay, you're gonna be specific. Cool, no problem. All right, GC1. This was yesterday. This 29th. Let's go with the 22nd. Look at this one, the 22nd. Yes, I think this is 3, 4, 8, 19. Yeah, this is a perfect one. So this is GC on August 22nd. Let me go ahead and get rid of my overlay. We can look at this as a whole. If we look at this, and on gold, I like to be in longer trades, so I like 4 hour more than anything else. So on the 22nd, right here. So on the 22nd, sent out a relative signal, basically looking something like the ballpark like this. Red is our stop loss, came very close to it. Our entry is above this level, so you would have entered on the 25th. Never came back. Never came back the whole entire time. So we're talking about a solid, undeniable move. Oh my God, wrong one. Grab that, right? About 1,000 ticks, and if you stayed in it, if you got diamond hands or if you're in forex, about 1,500 ticks. Just to kind of give you a little bit of insight. So I do look for commodities. If you want more information, by all means, comment down below saying, JD, I'm interested, and I'll go ahead and get you more details to go ahead and get you completely in. All right, so let's go ahead and get into some earnings. Like this. Okay, I know some of y'all are going to be like, well, JD, it's quad witching. There's not a lot of earnings that's going on, but somebody's got to report. So let's go ahead and pull up the economic calendar. All right, so Tuesday we got a couple of things. We got Zscaler. This one is going to be very interesting in itself. If you don't know me, I love my cybersecurity. Let me go ahead and drift this down a little bit. Squeeze this over. Perfect. Right. I love my cybersecurity. I do believe Zscaler is in a very good position for them to go ahead and take their nice little shot to go ahead and push. They're not like their other competitors, and you already see what happened with Snow, right? Snow took all the way off. I don't even want to break down what I sent out for the alert. And that this right here is probably your laggard in itself. We got ourselves a nice little move that looks very reminiscent of a textbook W type of pattern. If this holds this level, and we're already during pre-market's already doing that, we're talking about coming back into about 300, maybe even higher, and that's going to be later on tonight. So just keep in mind on Zscaler. You know what? Let me write this down. I might actually take that trade. Come on. Let's see. ZS. We might be looking for something down into that one. All right, let's go ahead and keep this going. For tomorrow, we have Macy's. I haven't seen Macy's since the pandemic. Let's see where it's been. It's been a long time. We used to kick it a little bit, but we won't kick it no more. All right. Nice little base that is building here. It does pay out dividends, which is not too bad for a ticker of its price. Generates some EPS, but they're 4.7. Again, retail is not the easiest place in itself. You got companies like PVH, which is a company that makes Tommy Hilfiger, that sells their products in there. It's probably best to be inside of that company than the distributor like a Macy's, because they have to be reliant on the price that they get from the distributors itself, so that way they can make some money. And I think that's why Macy's suffers so much. But you can see massive drop off from 2015, and then the pandemic. This was the spike up. This is when I used to play it a lot, and I thought, hey, you know, it's Macy's. They're not going to go out of business. They've been acquiring all these companies. But you can kind of see nice little drift down in itself. It came back into this monthly fair value gap. Let me go ahead and grab that right here. And you could kind of see nice little pop up, and you want to see that thing kind of hold its pop up and continue to the upside. And so I think, based on the parameters here, since we haven't been here since the pandemic levels, this could be a really good price for them to go ahead and put some real pressure to go back up here. I think this was just all profit taking, and if they got all the suckers out, maybe you could go ahead and get a nice little pop up. All right, let's see. We got CRM. CRM is a really, really good company. I think they're also in that package software space that is a little bit of a laggard. Could get a nice little base here. I did try to short this thing, but again, no entry, no trade. It just looked like it wanted to, but until we get confirmation, it is worthless. And then you can kind of see, look at this nice little push. Look at where it's going. It's trying its best to get into that gap, which is solid. And I think they want this fair value gap. I do have some other indicators in here. So we're getting close to possibly equilibrium. If it could get through equilibrium, we could probably be building a nice little solid base to kind of push to that upside. Why do I have that line there? Where do I have that line there? Oh, okay. I know why. Because I did something a little bit later. Yeah, that's a possibility. Oh, I remember. I was having a conversation on a one-on-one explaining all that. That's fine. All right, so that's CRM. HPE is also going to have earnings. Not a great company, but you could go ahead and keep an eye on that. ChargePoint has fell off a cliff. Now, here's the thing with companies like ChargePoint, and this is why they look like this. Tesla is eating their lunch, and now that there's reports that Tesla is going to be the standard. There's a strong possibility that companies like Tesla is going to go ahead and squeeze ChargePoint, and there's no money to be made for outside sources. Kind of like the USB chargers, right? You're gonna get a whole bunch of people that can make USB chargers, but ChargePoint is using the more older generic, and they don't have the blueprint to kind of go ahead and literally build the pencil style that Tesla has. So I think that's probably what's part of the problem. But then again, the reason why that's the case is because there is a strong component that a lot of people don't know that Tesla built into its vehicles automatically, is that conversion. So when you plug it in, Tesla doesn't need to convert anything, hence the reason why the charger port is so much smaller, minus the fact that they had the charger point onto, because again, it's cheaper. Why put it inside of each and every vehicle when you could put it inside the charger itself? But it makes the plug like a freaking size of your fist trying to plug that in. So I think that's a lot of the reason why ChargePoint is failing to do what they need to do. But you can kind of see they're trying to build a base, they filled into the gap, but there's just no follow through here. So if this bull flag fails, let me go ahead and put a trend line here. So we got a nice little, come on, give me my trend line. There we go. All right. If this bull flag fails, where we don't break out of this whole entire selling pressure that's happening, and the catalyst could be the fact that they don't, like, there's no money to shareholders. Just keep that in mind. It's just not going to happen. And the fact that we got 100 million in almost 100 million in revenue, and if they don't smash this earnings, this is not going to break through. And if it doesn't break through, then you got yourself a solid problem with ChargePoint going forward. All right. Let's see. We got Thursday. Nothing too fancy on the morning. I don't see anything. Let's see what nighttime. We have Copart. This is the auction vehicle, damaged vehicle after insurance claims company. This one is reporting. They do return money to shareholders, so I won't knock them, but I just don't like the space. What else we have in here? We have Docu. This thing is just like a radioactive cockroach. It just won't die. This one is Lulu. I do think Lulu is at its bottom. I do think that there's going to be a solid bounce. I do think that people are waiting for the earnings, and I do think that people are waiting for quad witching. So I think there's more upside than downside on Lululemon, especially when we're talking about a company that returned money to shareholders, $2 billion in revenue. So just keep in mind for Lulu to kind of ride a trend line very similar to something like this. Nice little company. I like companies that give money to people. It means I can trust you. And then this is AVGO. With the semiconductors doing all the movement that they had, there's a nice little reason why this is like pulling back to where it is. And listen, I'm not saying for you to get away from semis. I'm not saying for you to get away from tech. I'm just saying wait for it to kind of cool down, because this was going to be a bit of a short. You guys see, we started to short it, and yeah, that didn't really pan out. And it looked like they went ahead and grabbed liquidity. But if we look at this earnings, returning money to shareholders, $15 billion company, and they're the companies that's responsible for the reason why you have internet on your phone right now. Mobile broadband. That's what that is, Broadcom. They're the ones that actually service the modems that's inside of your phone, all the way from like back in the days with 3G, 2G, and all that stuff. So very important company, very, very useful, and they're not going nowhere no time soon. All right. And then we got Friday. Should be super light. There's only this company. I have no idea what they do. ABM. We have. Oh, I thought it was something else. Is this the company? Remember that company that used to make games for mobile devices? Zynga? Is that no? That's not them. Apparel, footwear, and they are based out of, where are you? They're in Italy. Let's see something. I'm curious about you. Zynga. Which companies? Is there anything I've heard of that you make? Thom Browne segment, or women's Tom Ford fashion segment includes all activities from Tom. So this is Tom Ford. This is the company that makes that. So interesting. Italians make an American name like Tommy Hilfiger. But anyways, we'll leave that alone. Let's see your financials. I'm curious about this. Security. Wrong one. Financials. All right, so they do have cash flow. They do have income. Maybe this is one that you kind of put in your portfolio and kind of like park it a little bit. Maybe. Let's see, 2 week. Yeah, we're probably closer to the bottom than the top. So this could be a nice little sleeper. Actually, you know what? Let me put this in my. I'll put this in my purple list. Let's put you there. All right. I'm gonna keep an eye. And then this one is Children's Place. This one is again, it's apparel, it's retail. In a company like this, you would think they would make a lot of money because these kids outgrow their clothes so damn fast. If you don't have any kids, then you wouldn't understand what I'm talking about. But this is a solid setup for them to just always recurring revenue. But here we go. They do not return money to shareholders. That's why you're down. They are a 206 million. This is a $260 million company. So looking at this and you're losing money. So that means you reported this and part of that is inside of this. So you tell me that the company is actually going down. You're failing. Or they generate more revenue there. Now the holidays are probably do a little bit better with the Santa Rally. So maybe we could get something nice out of this. But other than that, it has been on a decline since 2018. What happened? Oh, they were doing so well. They used to pay out dividends. Oh, they got screwed by the pandemic. They've never been the same. There's your answer. Right after 2020, they've never been the same. Oh, they were giving $3 a share at one point. They could barely even do one. Oh my God, there's your problem. Very sporadic earnings. Geez, -7. Wow. Yeah. To the OTC with you. All right. Let me go ahead and start to wrap this up a little bit. Like I said, there is going to be a couple of things that I'm probably going to be bringing in onto this show. I'm going to try to make this a weekly occurrence before the market opens for the week, probably on Sunday, so that way you can kind of get a little bit of a premise of the market. I do want to bring in some insight from what's going on in the trading sphere, something for the prop firms and prop traders, and something for futures traders specifically. Because even though I kind of go over some of the tickers, I want to be able to kind of give some insight and also some news. Like there's a lot of people that coaches and teaches, and I find them questionable. I found out that there is a boatload of signal services out there. I want to kind of like bridge the gap with quality versus the some of those stuff I've seen with 90% quantity versus quality. I want to kind of really clean up the space, and that's going to be probably my goal, is to kind of give solid. When I mean solid information that you can build off of and become not only a better trader, but be that one beacon inside of your family and doing better. So go ahead and follow the journey. Click the link down below so you can get your own personal charts curated for your own, with your own trading plan and everything else. And also don't forget to like, subscribe, and the bell button. Follow me on Instagram, and I got my Xbox down there. If you want to play some 2K, 2K is coming out on Friday. I'm excited, so that way I could go ahead and start my player all over again, which is the most craziest thing if you really think about it. Like, we literally each and every year, 2K fans, you know, if y'all in here and you're also traders, why do we do this? And maybe I'm starting to have a little bit of a revelation right now. We literally wait for each and every year to buy a new video game for us to build it back up again like a big old brand new Lego set. Like this is the craziest thing. We gotta build them all the way to 99, and some players, some folks that I know, they pay money for those like that virtual currency in itself, so that way you can go ahead and speed up the process. So just like really thinking about it, every year in September, we telling our wives, "Hey, give us a little distance." And I'm working on my career. I'm at the park. So I'm looking forward to doing so. So if you want to follow that journey, by all means, you can go ahead and do that. So I thank you for making it this far. Go ahead and put in the chat 2K, letting me know that you made it this far. And thank you. And let's get to 500 subscribers. You have a great day. Bye bye.